Now, if the Albanese government set out to crush the Australian housing market, I tell you what, it's doing a fabulous job. Auction clearance rates have collapsed. Sydney sitting at just 31.9% last weekend, Melbourne at 37.6%, both well below where they were this time last year. House prices in Sydney's northern beaches and eastern suburbs are down as much as 15% from their peaks. Melbourne's top end is down even further. Now, the reasons are no mystery. Higher interest rates, yes. The scrapping of negative gearing on existing homes, yes. The winding back of capital gains tax concessions, yes. And now the surprise deal with the Greens to make all of that happen and to ban self-managed super funds from borrowing to buy residential property. That's all gone. Let's talk to Peter O'Malley from Harris Partners, who's a terrific real estate analyst and understands all of this stuff. Peter, good morning to you.
Good morning to you, Chris.
If you were deliberately trying to destroy confidence in the Australian housing market, you'd have to give the federal government 10 out of 10, wouldn't you?
Oh, you certainly would. We're in a rarely seen downturn of this magnitude in Sydney. And I've felt for a while, Chris, that the federal government would be very comfortable if the national housing market looked the way Melbourne currently does, which has been under pressure for 3 or 4 years under the Andrews Allen government. And the policies that they're putting in place are designed to create more affordable housing in their dialogue, which means falling house prices for the rest of us. And that's what we're seeing now.
Boy. Clearance rates, they're already at decade lows and we're only at the start of winter. How much worse does this get this year given the change in weather?
Well, giving you some numbers, there was 900 auctions in Sydney on the weekend with a 31.9% clearance rate, as you said. When you get to spring, on some big weekends in spring, you can see anywhere between 1,800 and 2,000 properties going to auction in Sydney, Chris.
Right.
So if you saw auction volumes double in this environment, you would see the auction clearance rate probably go below 20%, so only 1 in 5 people getting a sale.
You're convinced that during July that will be the case?
Probably September, I think that'll be the case.
September? This is an auction period.
Sorry?
September is usually the start of the auction period.
Yeah, that's right. Yeah. So winter is low stock levels. We'll see tight stock levels, which will act as a support for the market through June, July and into early August. And the spring stock will begin to come from August onwards. So any vendor, notwithstanding how weak the auction clearance rate is at the moment, any vendor that wants to achieve a sale between now and Christmas, I think is better advised going now, Chris, because it's looking like prices will only deteriorate further.
Go now. Interesting. So what are we hearing about prices, say, in Sydney, suburbs that is? We're hearing that, those wealthier suburbs are actually feeling the pinch too.
Yeah, look, they came out of COVID and kept rising even when interest rates were rising because that's where people were parking their stock market gains. So the $5 to $15 million segment of the market has been particularly strong from COVID until essentially 3-4 months ago. Yeah. The other part of the city that's under duress, Chris, is Western Sydney. That had a tremendous rally coming out of COVID. Vendors were enjoying price gains of 40 to 50% over 3 years. But my research says that parts of Western Sydney are under as much pressure as the prestige market is in the eastern suburbs and the northern beaches.
Unbelievable. I know this is all supposed to be intentional so that properties are more accessible to those who can't afford it, especially first home buyers. But there are problems associated with smashing a market like this, aren't there?
Oh, really are, and I think the big one that's still to come, Chris, is what they call the wealth effect. When people see that their primary asset is going down in value, that's when they really tighten up their spending in the broader economy. The unintended consequences of what the government is doing at the moment will ricochet for the next few years.
But if people who can afford homes are losing their wealth and their assets are not worth as much as they used to, when it comes time to pass that wealth on to their kids are going to miss out on what was planned for them. That's in contrast to what we've heard from the government. The government wants, the younger generation to make gains.
Well, all of the policies that they've put in place are driving rents up. Now, as a first home buyer, it's very, very difficult to save for a deposit when your rent goes up 30%, which is what has happened to a lot of first home buyers. Funny enough, Chris, we sold a unit in Ashfield last week. On the first inspection, 26 parties turned up, all of them first home buyers. We took 6 offers after 6 days on market, 6 offers from 6 buyers, and the property sold for 10% more than what the vendor and myself were expecting in this environment. And the reason that happened is that first home buyers and with their parents' assistance are trying to escape the rental market, and they're now creating a price bubble at the very bottom end of the market when the broader market is falling. So this is what I talk about, the unintended consequences of what the government's doing. They work with modelling, but they don't understand that when you change the rules, you change behaviours.
Wow. This was not the plan.
No, it's definitely not, and we've got a long way to go before this fully shakes out. We're potentially seeing a restructuring of the Australian property market in a way that no one knows what it looks like at the other end, including the people that are making the changes.
But philosophically, boy, it looks a lot like socialism.
It certainly does. It's a war on aspiration, and that is why the government are going to continue to feel hit on this issue, because even people that might be left-leaning are not in agreement with what they're doing here, because it is a war on aspiration, which the country's never really had before. Well, not in my lifetime anyway.
Yeah, no, not at all. Peter O'Malley, great to get your analysis of all of that. Thank you for your time.
My pleasure. Thanks, Chris.
All right, there you go. Boy, I don't know what you think of that. You might be out there in the market, maybe helping your young family try and get out of the rental market like Peter described. Is that what you're seeing, like this bubble? So first home buyers are not being advantaged by any of these changes, as the Treasurer insists. They're being disadvantaged because the pressure is so much from rental prices and therefore the availability of rental accommodation that they've gone to buy, and so have a lot of others. And all of a sudden everything's overpriced at that level.